Thanks for tuning into this episode of Ask TVC, and today we're answering a question from Rich. I saw your article on paying off $55,000 in student loans in 14 months. Can I get a copy of the Excel budget? Now, I get this question a lot, and for those of you that haven't seen the article, here it is. You should check it out. It's one of the top, most popular articles on the blog because we got so many comments. And the comments are so cool. If you scroll down in the comments, you can start to see people are saying, how much they have in student loans, if they paid it off, what their game plan is. So it's really inspiring to go and check out those comments. But I got this question a lot if I could share the budget. And so, for anybody that wants to, you can go on the blog right here and just click and you'll be able to get the budget. But for this video, I wanted to actually walk through the budget because a lot of people that ended up getting the budget wanted me to walk through it because, this isn't a budget that any Joe Schmo off the street is going to pick up and probably understand. This is a budget that was made by two accountants for two accountants. And luckily for you, if you're watching this video, you're probably also an accountant. If you're not, you might be able to get this. Stick with me. But for most of you, this is going to make a lot of sense. It works with your the way your mind works. It's very detailed. Probably took us about an hour every month to reconcile the budget with all of our accounts, but I'm going to walk through it page by page and show you. So here we are on the first page of the budget, and this is just a summary of some of the things we did. I show the link to the article I just talked about. I talk about some of the biggest things we did that were successful, what you're going to see in the following tabs, how I handled it, and then I also link some other helpful resources. Now I'm going to go through each of the tabs and show you what we're looking at. So I started off with the net worth. Now, this was done at the end. I wouldn't do this first. I typically, to be honest, would start from the back forward. But I'm going to walk through the spreadsheet as if it's done and we're just looking at it. So here's the net worth tab. Now in here, what I would do is I would put together all of my assets and all of my liabilities. I had a bunch of student loans. We didn't really use credit cards. Although we used to use credit cards before we went into this whole process, we've really taken those out. And if you've got credit card debt, you need to really look at yourself and your behaviors, because credit card debt, I would say, is one that there was no real investment associated with that. You just couldn't control your spending. You overspent, and now you're in the hole. Student loans, there's this investment aspect of it. Obviously, I had way too much in student loans. I had $55,000. Some of you may have even more. But besides the point, you put your assets and your liabilities on here. Assets, obviously you have your checking and your savings accounts, any 401ks, any other investments that you have, brokerage accounts. We also put our cars on here when we used to have two cars, now we have one car. We put all that on here. We didn't put anything like furniture. We didn't put anything like that. The small essentials of life. We didn't put anything like that. Just big assets, cash, and other investments we would put on here. Even though we couldn't take the 401k out, that's still part of your net worth and still something you should include in your net worth. And then over here, we had accrual adjustments. So in your personal life, a lot of times, somebody owes you $300 or $400. Maybe, the insurance company overcharged you and you have to get a refund and you're going to get that. I would sort of put that here because I didn't like to see my net worth as just what was in the accounts. I like to see what do I also owe in the next few months and what do people owe me. So I put in the AP section, obviously, amounts that I owed people. So a lot of this would be like, I owed money to the government this last year for taxes. So I put that in here and I had that in there for a few months. Amounts that were owed to us, that would be things like, a reimbursement from an insurance company or something like that. And that would get me to my adjusted net worth. I had all the cash amounts and then I put in the accrual amounts. And that's really helpful. Just, as an accountant, we know that just because you have certain amounts doesn't mean that's what you actually have. Sometimes it's more, sometimes it's less, depending upon your situation. But that's the net worth tab. And it's really quite simple. All of this is calculations. When you're coming through here and you're looking at the yellow, that's where you're going to be doing the inputs. And then the rest of this is calculations, percentage of the totals. All of these in here, yellow, you're going to be putting in that with the description on the left. And then that's going to total up to your adjusted net worth. So that's the net worth tab. And that was really fun to sort of see that go up over time as we were paying down debt, saving more money. It's a really motivational thing. Okay, the next thing was annual projections. And, this is not a hugely mandatory tab for a monthly budget, but I like to keep track of, okay, where are we in terms of this entire year? And so, this is a very simple, set of annual projections. We had our take-home income. So this is post-tax, post any 401k contributions, which, by the way, we didn't do any 401k contributions when we were going through this process. We stopped contributing to retirement just to pay off the debt. And we stopped, all extra payments that we could that were, taken out of our income so we could throw everything at the debt. So when you come in here, you look at your take-home pay after taxes, basically the cash that gets, deposited or direct deposited into your checking account. And, these aren't the exact amounts that we had. We actually had a very up and down income. So I just put these in here to make it sort of consistent, but to give you an idea when you're looking at this budget. And then down here, I put our mandatory expenses. And if you're in really dire straits and you can't even make your rent, you can't even make your grocery bills, that, this budget is going to be a little bit different than you. You need to obviously pay for food first, you need to pay for living rent, you need to pay for gas, and then after that, you start going down the list of bills that you can make. But I'm assuming most of the people watching this and reading the bean counter are able to pay their bills, they have a little bit of income, and so I call these mandatory expenses. And these are things that, every single month I have to make a payment on. Because these are required based on my obligations. So rent, obviously, there's an obligation. I need to make that payment because I've got into a lease. Car insurance, same thing. Phone, internet, electric, student loans. I know every month I have to make these payments. And then I get to my mandatory expense total. And I always like to try and reduce this as much as possible. So now I've obviously got my student loans off of this. And I'm constantly trying to figure out ways to make this lower and lower. And then we get into living expenses. And this is where I know that I have a lot of personal control over these amounts on a month-to-month basis. I know my grocery bills are very determined upon, how well we're budgeting, if we're using any coupons, if we're paying attention to how much we're spending. Toiletries and restaurants, same thing. Haircut, however often my wife and I get haircuts. Other medical expenses, any gas, tolls, other, and then I add. And so if I had something in a month where I had a couple of extra expenses that were unexpected, I would put those in here, and then I'd start to see over the course of the year how much we were basically accumulating towards savings or debt. So you can see here every month, this month, if you go back up, we had $7,000 in take-home pay, almost $2,000 in mandatory expenses, which gave us about $5,000 for living expenses. And then we come down here, we had about $1,000 of living expenses, which got us to about $4,000 in cash left over that we could apply to the debt or we could save. And when you come and you look at that over the course of a year, you're looking at about $48,000. And I paid off about $55,000 in 14 months. So that kind of gives you an idea of how we did it. There were obviously some differences. Some months we had way higher income. Some months we had lower income. Some months we had a little bit higher of expenses. But this is the starting point, and I would add rows as you need. These are the annual projections to give you an idea. And when you're looking at a longer term goal, this is an important tab because it's like, okay, how many months is it going to take us to get here? We don't want to be on this game plan forever because it's tough. Now we're on the month tab. So this is what I would put together every month. And I would really end up hiding the checking and savings and the credit card tabs. And I would just end up having a month tab for each. And so I would have my net worth, annual projections, and then January, February, March, April, May, June, July, so on and so forth. But in the month summary, this is really where I start to say, okay, what did we do this month? And before we look at this tab, I want to go and show you what I would do here in these other two tabs. So for the first one, checking and savings, literally all I did was we use Bank of America, and we would go into Bank of America and we would export all of the detailed listing of transactions and we would dump them in here. And, this is just a summary, or this is just a couple example lines of what you would find in that entire Excel export from Bank of America. And we would put the date, the transaction description, the amount, and then, BOA checking, or, if it was BOA savings, we'd put that in here, whatever the case may be, if it was coming out of that account. But we put checking and savings in here. And if it was a negative, obviously, that's cash that's going out. So this is amount for utilities, this is amount for a haircut, this is amount for food, groceries at a store called Publix, this is at a restaurant, and so we would look at those amounts as negatives. Positives obviously would be any cash coming in the bank. These are amounts of income, direct deposits, other checks that you've received, so on and so forth. And then over here, we would just add categories for each of these and we would total these up. So you can see groceries, there we go, groceries right there, there's 3. We had a total of $78 in groceries. And we would just do that for every category. And as you can see here, we're categorizing everything in this little type column. So I would normally sort by that and then do quick little subtotals over here on the right. Now, that's great because then when you come over here to your month budget And when you look at the month budget, we have the budget, we have the actual, and I would come down here to groceries and I would just do equals, you know, this little 78 over here, okay? And that's basically how I would do it. And that way it would come through and it would flow through into this budget and I would know that I was capturing everything. That's just an example of how we would use it. So I would do the same thing for credit cards. The reason I do the checking and the savings and the credit card in different spreadsheets is because it has different numbers. Like a negative on a credit card is typically a payment that you make to it, and a positive is money that you spend. So it's not really, you can't dump it all in with the checking and savings unless you multiply by -1, which is just sort of a headache. So I always put these in here, and then if there were some grocery amounts in here, I would go to this tab and I would add, you know, amounts from checking and savings plus amounts from credit cards, so on and so forth. So all of these tabs are doing is really just totaling up into the monthly summary. And the monthly summary looks like this. It's basically just one column from the annual projections tab. Take home income, must make payments, how much was it actually? Why was there a difference? And we would look for explanations here. And then living expenses, groceries, toiletries, so on and so forth, like you saw before. Why was there a difference? What are we overspending on? What are we underspending on? So on and so forth. And so we would look through all of that. And you know, the other thing we would do is if there was a big difference, we would need to look over that in detail. And typically we would have like an other section here. And then we would have like transaction 1, transaction 2, 3, 4, 5, all the way down. And we would have, you know, the dollar amounts, 20 bucks, 50 bucks. And we would normally just, you know, bring those over from, you know, this column, these tabs or whatever. There'd be an other section here. And we would bring that in here. And then we'd say, okay, here's our budgeted versus actual and variances. What are the reasons? Did these make sense to us? Did we know about them? Are they unexpected? Did one of us do something that we forgot to tell the other person about? And here's all the other payments that we had that were like, oh, you know, I didn't realize I was going to have to make this payment, and so that came in. And all that is going to reduce your final bottom line, money left to pay off debt or savings. And then up here is the summary, really simple. Take home pay, must make payments, living expenses, total expenses, and then your amount that you can save or apply to debt. So I hope that that helps shed a little bit of light on how this is going. A lot of this is going to be you know, automatically calculated for you. You're just going to have to put the amounts in the yellow areas of the spreadsheets. But I hope that that helps on your train to pay off debt. Remember that the budget is just there to help you. It's not, you know, you can't just start this budget and then, oh, we're going to pay off $55,000 in a year. No, it's up to you to change your behavior to make these amounts come down, to make these amounts go up, and really start making a change in the bottom line. If you have any questions, you can tweet me at AndrewArgue, or you can email me at andrew@thebeancounter.com. I hope this was helpful. Talk to you soon.